C-Suite Financial's goal is to be your go-to investment advisor. In addition to investment expertise, you are also partnering with C-Suite experience. Now, let's see what I missed today with Brian.
Today we're looking at a 990 tax return. So this is a nonprofit organization for the purpose of understanding how much money was actually left on the table. This particular organization, you can tell by the numbers, they just kept their reserves as well as their operating funds in a bank account. It may have been a checking account or a savings account, but you can tell by the numbers we're going to be looking at. So for starters, we're looking at part one of the 990. So the part one would be equivalent to business profit and loss. So this accounts for 12 months. And this particular organization, we look at line 10 of part one, the investment income, and we can see that they made $1,356. Another number that we bring into consideration are the total expenses for the year. So this organization has $15,809,000 for this particular year in which we're looking at. Now we're also going to look at part 10, which would be equivalent to a balance sheet. And the lines of consideration we're looking at here are line 1, the cash non-interest bearing. We're looking at savings and temporary cash investments on line 2, which is $2,150,000. And if they had anything in line 11 or 12, which this particular organization does not. So we just need to take the items from line 1 and line 2. I tend to leave out accounts receivable on this because once we do a little bit of a deeper dive, that will explain itself, because some organizations just have a running accounts receivable, while others, it's just a lump sum. So we get a better understanding of that once we dive into the details. So taking that information just discussed, we're looking at line 10. So that's the interest earned, $1,356. We look at the annual expense of $15,809,000. And then a combination of lines 1, 2, 11, and 12 from part 10, which is just under $11.2 million. Now, what we want to do is we want to figure out what our operational funds are. So these are the funds that you use for your day-to-day operations. You leave in the checking account for whether you do it biweekly or monthly for your expenses. That's what the checks are made out of, that account. Anything above and beyond that would be the reserve funds. And those are the funds where you can invest in those funds and optimize your assets, especially in times like this where there's going to be funding cuts and things of that nature. That's where you can rely on how you're utilizing your reserve funds. So putting in this calculation, we have an operational funds of just over 2.6 million. So that's the target to keep into your banking account, your checking account for the biweekly or monthly expenses to be paid. And you can do that by taking line 18 and divide it by 6. That will give you 2 months of operational expenses. So of the total of part 10 that we took between lines 1, 2, 11, and 12, you subtract what you're going to use as your operational funds, and that's what you come up with for your reserve funds. So these are the funds where you want to make sure you maximize them, utilize them by investing in them instead of just keeping them in a banking account, whether it's a savings account or a checking account. So when you look at the reported return on investment, we're looking at the $1,356, and then we're dividing that by the reserve funds. So 0.0159% for the year, that gives you 1,356. So below that, I have, there's different options. There's a variety of different options, which are determined by the investment profile questionnaire. Now, this is most conservative one. We're looking at treasury notes. We're looking at a balanced mutual fund, which is split about 70% equities and 30% bonds. And then if we were just to mirror the S&P 500 index. So when we look at that, as of today, we're October 7th, 2025, we are getting treasury notes at a rate of 3.947. So that would give you a gross return on investment of $337,125 compared to what was actually earned. So that variance, you made an additional $335,769 just by investing in treasury notes. Now, as mentioned before, the investor profile questionnaire, that will provide a little bit more insight as to how sensitive you are to market fluctuations. So if you're looking at the balanced mutual fund, you see a rate of return of 15.83%. So that gross return on investment is $1,352,000, being over $1,350,000 more than what was actually earned. And if you were to do something that mirrors the S&P 500, you're looking at just under 18.2% gross return on investment is 1.553 million. And again, you're beating out what was actually reserved by $1,552,308. So you can see this can make a significant impact and is often overlooked as underutilized assets.
This leaves a lot of opportunity for those of you in the C-suites to reach rockstar status with your board of directors. C-Suite Financial wants to help you get there, so book a Zoom appointment with Brian so you can start moving towards rockstar status and contribute to your cause that much more.